Hello everyone, I'm John with JP Strategic Investments and welcome to our weekly investor update. First of all, I want to give you guys an update actually on a change that we're going to be making to how we upload videos. So we've noticed that these videos that we do, these weekly investor updates that we put out every Sunday, are getting a lot less views than our other videos that we put out that are more topic specific, and the entire percentage of the video that is watched is actually a lot less than our other videos as well. Now part of this we think is due to these videos being less topic specific, so meaning we cover a wide range of topics in these videos, so people that may be interested in only one or even two of those topics may not even watch the video or may only watch the specific part that they're interested in. So what we've decided to do is we're going to keep the weekly investor update, but instead of a video, it'll actually be an article that we post to our website. So if you guys didn't know, we do have a website, jpstrategicinvestments.com. The link to the website is in the description of all of our videos. So if you want to check that out, we put out articles on different things. We just recently put out an article last week on Tesla's earnings and a few other things that we go over. So we're going to transition this weekly investor update into an article on there. So if you guys still are interested in checking out just weekly stuff that we're looking at, our thoughts and analysis on different things that are happening throughout the week, you can check that out on our website. It'll still be up there. So what we're going to do now with our YouTube channel is we're going to put out more and more videos throughout the week on specific topics and things that are happening throughout the week. So we think this will be better for our subscribers and viewers as well, because you guys will get our thoughts and analysis on specific news as it comes out rather than waiting for Sunday. And you'll also have a good idea of whether or not you'll actually be interested in the video, because they will all be topic specific videos. So just to give you guys an update, that's kind of what's going to be going on. So next Sunday there will not be a video, but if you still want to check out that weekly investor update, you can definitely go to our website and we'll have an article ready for that. So that being said, let's get into this week's investor update, the last video investor update, and we'll try to make it a good one for you. So this week we have a lot to talk about. We obviously have the market down very significantly over the last week. We have rise in COVID cases. We had major companies reporting earnings last week. And then we also have, in the coming week, obviously, the election. So there's a lot to get into, so let's dive right in. So first of all, the recent market decline that we've had over the last several days, we think it's due to a few different reasons. And so there's been talk of the market pricing in a Joe Biden win, and with higher corporate tax rates and other things that would generally hurt larger corporations, the market is kind of pricing that in with a slight drop there. We think this could be a contributing factor. It's probably not the main one, but it could contribute to part of it. We also have rising COVID cases, which on its surface, they aren't increasing actually too much, and we do have an increase in tests, which account for some of that rise in cases, but there is still also an actual rise in cases and the positivity rate of the tests. So that being said though, it's not necessarily the rise in cases that is scaring the market. It is the rise in cases causing a possibility that we could get more lockdowns. Now, obviously, more lockdowns would be very bad for the economy, and the market doesn't like this possibility. So we actually think that this is kind of the main reason that we've seen some of the market crash. And then the final reason is just any uncertainty that we're going to have around any election, which the election is next week, of course. So leading up to the election, investors, especially large banks and investment companies, will kind of take any excuse to sell off a little bit, take some precautions, because with any election there are uncertainties, especially with this election. You know, like we said earlier, Joe Biden would increase corporate taxes and probably increase regulations, which would hurt larger corporations, which is generally the stock market is made up of larger corporations. And then we also have, you know, everything going on with this election, possibilities of civil unrest and things like that, which I think a lot of investors are just going to say, we'll sit on the sidelines and we'll just see what happens. We don't want to be too exposed in case anything crazy happens. So those are kind of the main things that we think are driving this recent market turn down. Now, it has created some opportunity. It has also hurt us a little bit. Obviously, our position in Tesla, those of you who have been following the channel know that we do have call options in Tesla that we had purchased before their earnings. And so obviously we're down a little bit on those. We have been buying more call options for 2021 and picking up some more shares at the cheaper price. So while we are down in the short term, we're looking at it kind of as an opportunity for long-term growth going forward. Now, the other thing we have to look at here is the big earnings that we had last week from Amazon, Facebook, Google, and Apple. Now, most of these companies actually did pretty well on their earnings, even though we saw their stocks drop 4, 5, 6% after they reported. And there's a couple takeaways that we want to look at here. So obviously Google crushed it. Anybody that saw their stock, it was up 10% after hours, and it opened up around 8 or 9% the next day, but then slowly declined pretty much the whole rest of the day along with the rest of the market. And that was really the only green stock of those companies that reported earnings. Amazon, they crushed their earnings as well, but their stock was down well over 5%. If we look at Amazon's earnings, they grew revenue in a huge way, which for a company as large as they already are is very hard. And they beat earnings expectations by over 67%, which is amazing. And so if we look at their earnings though, one of the things that I really want to touch on is the amount of revenue that they did this quarter and the amount of revenue that they expect to do next quarter. So they did $96.1 billion in revenue this quarter. In the next quarter, they're expecting as much as $121 billion. Now, what this is saying, at least to me, is that Amazon is very confident in the American consumer, because Amazon has a very good vantage point as far as the American consumer goes. They're the largest retailer in the US, and so they see trends within consumer spending pretty much before any other company or even any other government organization sees these trends happening. That's one of the reasons they're so successful as a company, because they can get on top of these different trends before any other company does, and they can be very profitable by doing that. And so one of the things that stands out to me about their earnings is how much money they made in the third quarter and how much money they expect to make in revenue in the next quarter. They expect their next quarter from a revenue standpoint to pretty much be their best quarter ever. And so if they're expecting to make a huge amount of revenue and a huge amount of profit in the next quarter, that means their confidence in American consumer spending is very high. And with the vantage point they have, that gives me a lot of confidence in our economy, because if people don't have the money to put food on the table or to pay the rent or to pay their mortgage, then they're not going to go out and do a ton of Christmas or holiday spending, right? Especially they're not going to do a ton of spending on Amazon in the third quarter, which isn't even a holiday quarter, right? And so if we see this amount of spending and Amazon forecasting even more spending in the consecutive quarter and even in the quarters to come, that gives me a lot of confidence in the American economy. And it tells me that, at least from Amazon's perspective, the American consumer is very strong. So I just wanted to touch on that because I don't think a lot of people were covering that as far as Amazon's earnings went. So that's kind of most of what I wanted to talk about as far as last week. So as far as next week, really the two major things that are going to matter to the market are the election and COVID cases. So as far as the election goes, obviously we mentioned before, if Joe Biden wins, he will probably increase corporate tax rates as well as regulations, which is going to hurt stocks a little bit. But we also at the same time have different races for the Senate and the House, and there's a lot of different things that could affect whether maybe a new stimulus bill gets passed and different things like that. So even if Joe Biden were to be elected, if we see a sweep maybe with the Senate going to the Democrats and the House being maintained by the Democrats, then investors could also look at that as a higher probability that we get more stimulus, which could offset some of those risks with the higher corporate tax rate. So really, it's kind of going to be a crazy week. And then we have COVID tests on top of that. We'll have to see if we get even more increases and whether or not that could cause more lockdowns going further. Because the other thing we have to take into account is, even if Trump wins the presidency, it's really these state governors that are deciding whether or not to add new lockdowns or continue whatever lockdowns are currently in place. So it's going to be a crazy week. There's going to be a lot of stuff going on. And so we already have our SPXS that we have purchased, and we already have UVXY calls that we've purchased. So we're kind of just going to sit on the sidelines. One play that we may make, and we'll let you know on the Discord server if we do make this, is we might actually buy some further out of the money Uber puts, just in case Proposition 22 doesn't pass. Because if Proposition 22 doesn't pass, we think that could be a huge negative for Uber, and there could be a very big reaction in the stock based on that. We already do have some Uber call spreads, so we're probably going to keep those, but depending on how the prices shake up in the options, we may buy some of those puts on Uber just to hedge a little bit, and also maybe take advantage of a big drop in the stock and make a little money off of that It really depends on where the options prices are on Tuesday, because that's probably when we would be buying them. But other than that, we'll keep you posted, and remember that we won't have a video for the next weekly investor update on next Sunday. It will be an article on our website though, so if you're still interested in that, you can check that out. But other than that, have a great week everybody, and we'll see you next time.